Hi and welcome to the Market Alert for Friday, the 23rd of April 2021. So Goldman says no surprise in Biden cap gains proposal. That's capital gains proposal sees Congress settling on 28% tax hike. This is the theme for yesterday. Way to go, Joe. Bonds bid as Biden tax plan tanks stocks. And it continues. Stocks puke as Biden's capital gains tax reality strikes. It says here that for New Yorkers, the combined state federal capital gains could reach as high as 52%. For Californians, 56%. That's a lot, isn't it? Biden plans capital gain tax hike to help finance the $1.5 trillion human infrastructure package. I wonder if that's related to what the World Economic Forum are up to with their transhumanization. You're going to see an awful lot of stuff now with regards to climate change. Now COVID's going off the boil as well. It's going to be a shift towards this, as this is what is behind the World Economic Forum and its reset, the resetting of our behaviour and how we have had life up until this time last year, i.e. freedom to travel, etc. You're seeing all of these measures coming in now. Also yesterday, Americans on jobless benefits jumped back above 17 million as initial claims dip. And despite the lowest initial claims since the pandemic began, the total number of Americans on jobless benefits rose back above 17 trillion when they released the figures during yesterday. And talking of things rising, the implied volatility shot back up yesterday as the Dow moved to the downside. I'll just show you that quickly. You can see there, that's when it all got announced about Biden's capital gains tax proposal. And that's how the market headed south. And this had an impact, of course, on the implied volatility, sending it back up from the 13.97 to the 15.27, which took out the 15.12 that we saw during Tuesday's session, or Wednesday's, I can't remember now. Whichever the other down day was, let's just have a quick look and remind ourselves. Yeah, so it was Tuesday. Stocks up on Wednesday, down on Thursday. Stuck in a sideways range there, quite a volatile range as well. But then it was quiet, wasn't it, until this news came out. Although we did have a sell-off at the start as well of 150 points for the Dow down, and then the usual pattern, and then making its way back up to the previous high before this news yesterday. So the Dow in the daily chart yesterday showing some selling there and support overnight. Now the shock and awe of the proposed capital gains tax increase is now in the market. Prices showing some support there. In the DAX we have this picture, which is interesting. We've still got the shorts covering there on Wednesday, Thursday. The overnight market for the DAX didn't really follow the Dow with the Biden announcement, and prices have still got some support there at 38% and are currently trading above the 5-bar moving average. Begs the question though, are we at the start of a corrective phase, given that the news is now out with regards to how much the capital gains tax levels are going to be. As before, I will be looking at any of these levels as any sort of failure if we don't get back to the all-time high for the market to correct. And that's the same for the Dow as well. Meanwhile, in the 2-minute chart overnight, let's just have a look at this. We can see it's fairly flat. The market trading below the DP, the purple line there, the daily pivot, and the 200 MA until we got to the around 2 a.m. This morning, 2:30. The market's managed to get above the 200 and now trading at the DP level there as well. With regards to the bigger picture, we've got the low down here at around 50 points at the moment, and the high around 80 points up to the upside for yesterday for this range of Thursday's bar there. Regards to news, what have we got? Let's have a quick look, quick refresh there. Friday, we've got retail sales for the UK. They're out in 15 minutes as I'm recording. We've got Euro. It's all the flash news this morning. That's a pain in the rear, isn't it? So all the flash news out this morning, they're all downgraded more or less from last month, but only slightly. Again, we've got flash all the way through. Yeah, that one day in the month when we get all of the flash news, it's a real pain in the rear because it breaks up the trading with the news being released. And Lagarde's out at 3:35. Bit of a damp squib yesterday. There is news about what she said on Zero Hedge with the headline snooze fest, which is about right. Meanwhile, the yields are still down at the 155-ish level. This has been fairly flat, having had a start to the week where we're up at, I'll just get rid of that, where we started up around the 161, but otherwise it's made its way to the downside, barring a few bounces along the way. In the metals market, interesting for here yesterday, silver moved to the downside and an increase in volume as well, looking weak overnight. Got the levels lined up here for any pullback down to the 220 bar MA at 62% would be the area. But very interesting what's going on in this market at this time. Okay, and something a bit different in the metals this morning. This is the long-term chart of gold. You can see that down in 1978 we were $800 an ounce. And you can also see that if we just draw across here that back in 2011 how the market actually traded through this and moved to the upside, and also has taken out the top side of the 2011 high as well, even though there's a bit of a pullback. So you can see how gold has moved higher. If we go to silver, you'll see a completely different ball game. This is the 1980 high of $50, 2011, and where we are now, we haven't even got through the previous one, let alone 1980. So it's so undervalued, as you can see here. So this really needs to move to the upside. And as Bix Weir said in his report yesterday afternoon, which is a very good point, you know, we could do without gold, but we can't do without silver. There'll be no widescreen TVs, computers, all electronics, solar panels, etc. So this is seriously undervalued and suppressed. And once it's allowed to move, it'll go up to 4 or 5 times of what we're actually seeing here when you actually see the difference in the gold compared to the silver chart there. So an interesting one for the metals market there. And yesterday we can see in silver that we had some selling coming into the market, and I've marked up the areas of support here. And I think for me the favourable area on any pullback would be 62% if allowed to move to the downside or shaken out to the downside. We'll just have to wait and see. You've got the largest delivery ever on the COMEX this month as well, with millions of ounces. I forget now, I think it was 10 million ounces of silver set for delivery as well. So they're going to do their best to try and crush the price to get out of those contracts. So don't be surprised if we get a major sell-off in silver. And interestingly enough, you can see that the dollar is actually down and silver is also down. So they're starting at the moment to manipulate these prices for the delivery that is due, I think, next week or the end of the futures contract, the last trading day. So there you go. Gold also sideways as well. Meanwhile, yesterday, an interesting one. We saw the market moving higher initially and then failing in the futures market. Very quiet and then drifting down before the market opened. See a bit of a battle going on, and then prices move to the upside. We've got some more weakness there because we've got the resistance across to the left there, which you can see. So prices have one more spike up and a lot of volume in this bar over 2 minutes. The market ramping up, say, to get through this resistance. Market fails and then starts to head to the downside, which you'll see in a moment. You can see how it's sitting on the high there trying to hold, but eventually they slam it through the high there. The only way to get through the 20 bar moving average, the 200, and head towards that psychological level, the BRN. However, they bring the market back, as we see there. We've got some buying pressure coming into the market. I decide to stick with this for the time being, just to see if prices will actually retest this and the close. On this occasion, it worked out fine. And again, another reason is it just failed to move higher and then traded sideways. And any way it can move back to the upside, it's got to shake out. So you'll get a short-term shakeout in these sorts of markets, which you're seeing there at the moment. And as we head back towards those lows, you can see that the buying starting to increase in the market as well. So I decide to jump out as prices. There you go. You can see there we've got a tiny bar, and the volume is more or less the same as the previous bars. So I exit stage left, but the market wanted to come back and just have a quick test of that close, which was the initial target, and then prices start to pull back. You can see there you've got a 62%, 78 pullback. Actually, it's more 78, 89 before the market then starts to move to the upside, which is what we see there. And then, oh yeah, we had another. We got back to the high where we'd come through here. So we had the previous selling there, and the market reversed, and we see prices coming down to the entry and then holding at this level. And again, from here to here, trading back, you've got 62, 78% retracement. And as soon as this started to happen, there we go. You can see there's a 78. It was time to just say thanks, but I'm out. Which was the right move, even though we had a bit of selling in this bar trying to bring the market back down. Prices reversed and headed north, and that's how they stayed for the morning. Not through the high. You can see them driving through the high at this point, and then continuing to move up until it was met with some selling, and then drifting back down to the high and sitting on the high. And when we get to the afternoon, we're still back at the high, even though we had a bit of a move up on the jobless claims prices sitting on the high. But then, as we saw earlier, if I just bring this chart back up, the Dow sold off at the start, 150 points. And interestingly enough, the DAX took a moment or two to follow. Eventually, it broke through the high, which you'll see there, and we headed down and then found support. And as we're finding support in this area, again, we've got buying support here, similar to what we saw earlier in the other in the morning session. So again, I decided to jump ship on this one. The Dow was finding support, and the market started to come back. You can see they're struggling a bit at the high, but then it was just a one-way bet. And this was a very interesting bar because we had another signal through the high, and then it was slammed down and brought straight back. I mean, the speed of this was something else, and you can see huge volume there. So they just wanted to test, see if anybody was happy to buy at this level, or they were already positioned ready to buy at this level, because after this it was just a one-way bet as the market came back. But again, you can see this here, how it sticks out like a sore thumb. It was the highest volume we'd had for X number of bars while the market had been trading in a range. You got there back to 78, then we double bottom down here, test the market, and then move it to the upside there. So prices then trading all the way back up to the R1, and then eventually they just trade sideways in a range until we get to the 4 p.m. Close there. Okay, that covers everything for this morning. So we'll just have a quick look, see where we are, what the market's doing now. It's still above that DP level as the futures market is about to open in 5 minutes. Okay, that's it for this one. As ever, thanks for watching. See you in the next one.